Take all your money, buy Bitcoin.
You can wake up every morning and say GM.
GM. Today is Friday, 18th of October, and let's look at daily levels. So, we'll look at Bitcoin, check back in on IBIT. I want to look at stocks. I want to talk a little bit about consensus and some paths we could see from here. All right. So IBIT. Mentioned this yesterday about, all the reversals with the ETFs and the flows. And so following a gap up and a few trending days, we've seen really high inflows persistently, including Tuesday, Wednesday, Thursday, having a cumulative 1.3 billion, 1.2 billion, 1.3 billion, and no follow through. So while it's not bearish here, it's just moved up and starting to pull back slightly, could just be consolidation. It is extremely high in terms of inflows, very much BlackRock dominated too, and we've broken the 20 billion total inflows mark. So maybe this is the beginning of something new, but as of what I said yesterday, until this range breaks, until we get above this area, then I don't see it being any different to what it has been before, which is some kind of pullback. And if we can break from that, then we have the flows that have pushed in, if they're on the right side, can probably take us to all-time high, or knocking on the door of all-time high, which is going to be on that path I mentioned. Now, where are my two paths? Did I delete that path? Oh, I have it on the CME one. There we go. Yeah. So blue path. Red path, still entirely possible, whether it's to here or to just pull back there, whatever. It's just a pullback. The magnitude of that, worry about that if it comes. The exact reasoning for that, the level, whatever, is Bitcoin breaks above, consolidates, but does not continue. Now, when something breaks above and consolidates, it's going to try and continue. So that's why I've said all along, no interest in shorts here. Shorting here makes no sense. Higher time frames bullish, all of that. And mentioned here, where was it? Yeah, never short a quiet market. Another quiet day for Bitcoin. It's going to test the highs again soon. Reason being is that when the market is like this, I'll just go back to the full chart so you can see. When the market's like this, and since the real volatility that we had here, which was all the way back on Tuesday, was when we had the last bit of real emotional price action, super hyped to super fucking it's over, and then just grind it back up, took out the highs, dropped back inside, and then just sort of drifting lower but holding, and then sort of drifting higher and one impulse candle, and it's a quiet market. And so when I said is like, don't short a quiet market over there, right? That was last night. This is why you don't short quiet markets. Off the open, boom, squeeze up. Anyone trying to short this narrow range is going to get blown out. And most likely it's going to try and go higher, test the highs at least. Because, first of all, if this is bullish, it's exactly what you want to see, which is after a strong move, you have a consolidation near the highs, a tight consolidation, and then the breakout of that leads you to your next point. This is where you don't get any kind of deep pullback in the near term, and you probably move to new levels above, and if there's a pullback, it comes later on. Quiet markets, it's is something that we haven't seen. Now, I can't call it that yet, right? It's not that much different here to what it was over here just yet, although it is slightly less volatile, which is important. It is stronger, right? You see we're holding it to 50. Over here it was dipping down to the 100. And here we didn't really have it. We had this move up and the market was sort of quiet for a few days and definitely volatility dropped off. But as soon as it was an attempt to go higher, immediately we saw that bearish rejection, which is why you have to watch and see what happens when Bitcoin takes those highs again. And then over here, same thing. This was all very distributive. And you have to go all the way back, naturally. You have to go all the way back to our January and February moves to see an example of what we mean by that. After moving off the lows, it goes quiet for over a week. It compresses. It moves into a pennant sort of formation, right, where price is compressing into that, leading to a nice move. Exact same thing happens at the next highs. Slightly different shape to it, but just a lower and lower volatility, compression along, and then we move higher off it. So that's the kind of price action you like to see at bottoms, near bottoms, and when the market's rising. And even over here, we obviously had the big spike with the fake news back last October, but then the market kind of went very quiet. It just chopped around and was drifting and then moved up, but then instead of rejecting coming back, it just drifted around for another few days and then kind of just nicely, steadily moved up. Whereas when you're not ready for the breakout, you see this. Notice a lot of this, more of this volatility. Big spikes up and big spikes up and big spikes up and retracing it and retracing it and big spikes and big spikes and big spike and chop, chop, chop. See the wide range. Wide ranges, lots of mean reversion, lots of pumps that fully fail, lots of big moves that collapse all the way back, price breaking down below the bands. You're not really seeing any of that. We saw a little spike there and then it's been quiet ever since. So never short a dull market, never short a quiet market. Now, I don't know if that means we're going to have the breakout yet, but what we'll be looking at if that were going to happen is, I would say a 4-hour time frame is good to look at here. So far, Bitcoin has held the 4-hour 1221 EMA trend. So that's currently the primary trend for this move. Until that level, basically until price stops respecting those green bands in the 4-hour, I would expect that to continue higher unless you lose a key level, which would be this breakout point. Okay, so if you lose this, even if it's into the 50 and the 100 and the 200, if you lose that level, you're much more likely then to have completed a false breakout because there's been Tuesday to Friday, you've had like 3 or 4 full days of position building at the highs. And if price goes below 66.5, back down into this area here, you could, unless you get a quick reclaim, you could have to see those positions unwind. And that might just mean staying within the 65 to 68 range, back down to the support, and coming back up again, and that's where the consolidation forms. Again, this, as an overall early trend leg, even if it did that, that wouldn't be so bad. I mean, go from the low to the high, all of that would still just be a 382 pullback, so not even a deep pullback, not a 50%, not a 618, which again wouldn't show much immediate weakness. And it's why I've said as well, if that other path, which is the path that basically we're going to go all the way back down and retest all of that area and maybe take the lows and all that, I've mentioned that the best trades are below 65 because that's when the actual unwind will happen. Positions are building here, chasing is happening, and positions can continue to build as long as the market retains bullish structure. When you saw it over here, move up, consolidate, move up, drop back, even here, as the bands were going red, sure, in hindsight that's fine, but even here, and even here, you're like, okay, well, this could still just hold and move towards the highs again. But as soon as it started to break that level, that's when the unwind is happening. Unwind happens quickly down into the gap, and then we have to spend a couple of weeks in that area. So there's no rush on either side here. The reason why it's going to go higher at least to test these highs. At least it should. Again, I'm still in the pullback camp. That's the path that I've projected, and that's the path that's playing out so far. After the move up, I expected to see several days of chop around here. It's only when you get an actual breakout above that you start looking higher. But in the meantime, it's way easier for the market to go up than down, because there is still obviously some hesitation. People don't like to buy rising markets like this because they think it could fall back on them. It's like, oh, do I want to buy here? I want to buy a dip. No, dip doesn't come, and it continues higher. Right, that typical classic sort of wanting to buy lower, not getting the chance to, and then before you know it, the market moves away from you. Then you're thinking, oh, now I need to get in, and it drops back. And then up, and then back. And then up, and then up, and up, and up. That kind of path is much more appropriate for a continuation here. Reason being is, think of the psychology of it now. How are you feeling right now? If you don't have Bitcoin, if you're not long Bitcoin, how are you feeling? If you are long, if you have Bitcoin, if you've got shitcoins, put yourself into the shoes of how you'd feel if you didn't. A good little trick for this is think back to previous times. This is why journaling is so important. That's why you should have journals of each day of what price is doing and how you feel about it subjectively, and then what you did objectively with your systems. What processes, what decisions did you take? Because I have to look at my journal because I have Bitcoin. I've got Bitcoin and I'm long. So I'm happy it's going up. And if it pulls back, I'll be happy as well. I can buy more and I can get longs and blah, blah, blah. So the way to think about it is, if I didn't have any coins, if I was completely sidelined, how would I feel? And so the reason why you would feel hesitant here is because where do you put your stop? Right? If I get long here, what, do I put my stop there? It looks like it's really easy for that to get sweep. And so you're like, well, I'll wait. I'll wait at least for this sweep. And then what happens is it goes higher. And when it goes higher, that's when you question yourself. You're like, fuck, it's over 69 now. We're at the old all-time high. 170k breaks. Everyone says it's just going to be a gap through and that's it and it's gone. And that will induce chasing. Not for you. Don't you panic. But people will chase that. And then it's more likely to drop back. Even if all of this is still bullish, right? But it drops back. And then it chops around, moves up, moves down. And then the second round of chasing happens. Because you get this, you have a false breakout. So people would buy here, they would sell here. You'll have a typical bounce, just a regular retracement after a sell-off. And they'll FOMO back in. And it'll drop back again, probably take out any of the lows from here. And all the while remaining bullish. This is all above the breakout. And yet, if you don't have clear plans, if you aren't on top of your emotions and psychology, you're getting yourself chopped up in something that is fucking bullish. And then, of course, boom, away it goes. Chasing begins proper. And most likely, what happens with something, a move like this, is it moves up, moves up, moves up to a key liquidity area. And that's where you want to zoom out. The liquidity areas, where this can actually go above and reverse from. We're at one at the moment, by the way. That's why I'm still looking at this. I've shown you on weekend workshops before about multi-candle breakouts, false breakouts. So we have broken out from here. But you've seen plenty of breakouts in the past, like this one. Breaks above these highs, stays above for multiple candles, drops back. Breaks out above these highs, stays above for multiple days, drops back. This is still possible here. However, if it doesn't happen, what you're going to see is that chasing effect. So you look at your next levels. There's liquidity above there, and then you have several of them. You've got this double top here, and then you've got, at that point, you're probably just looking straight at all-time high, okay? And so that chasing effect, if it chops, right? Breakout, false breakout, doesn't go lower, chops around, then moves up. then you're looking at where is price reacting negatively. And all you're looking at for that is price to consolidate below one of these levels, push above it, fall back below it, and a break in the 4-hour EMA trend. So the 4-hour bands, which are green, at some point they will go red after taking one of these levels, and that's when you're likely to see your sell-off. So how that would look is, if I take this off, I'm just going to path project this, move up, false breakout, sweep those lows, and then you get your move through, you get some kind of consolidation, and then it moves to one of these levels, tries to go above it, comes back below it, and you have a break. So here is where there's maximum risk, because people will still think and feel like this is bullish, because look at the blue path, it's pretty much bullish. But if it's taken one of those levels, 70, 72, or 74 all-time high, that's when you'll see an unwind, most likely, as it will just start to go down, because people will try and buy every dip, and it'll go down, and it'll go down, and it'll go down, there'll be a rally, oh that's it, and it'll go down again, and it'll bounce up, and it'll chop around, and it'll chop around, and it'll chop around, and this is like the bullish rising reaccumulation path, where we don't go all the way back down. These gaps get left. There's no 65, there's no 63, there's no 60k retest. But if you see something like that, which is essentially, again, zoom it out, which is essentially like Bitcoin putting in another, what looks like a top. You know, it looks similar to this, similar to that, but near the highs and at the highs, and what it's actually doing is building low, high, higher low, higher high, and building a higher low. So it's actually building a bullish structure, but it won't feel like it if you're not prepared for it. Reason being is that it doesn't look good. It doesn't really have follow through. You have breakouts that get to certain levels. You have drops back. You have lots of bounces, and they chop, and it's messy, and it's grinding, and it's all over the place. And then after it all quietens down, people think, well, it has to go here now. And then it doesn't. It just sort of grinds through to those highs. And then right at the point where you think it's going to break out, you have to get fully allocated again, comes back. And then it begins a run proper. And that's how you can get, essentially, that's how you can fuck up a long without it ever breaking structure, right? You can fuck up a long trade without it ever even going to your original invalidation, unless it was that red line. But let's say you think, okay, 65, if it goes below there, it's definitely bearish in the short term. And all of this can happen, and yet it never even goes there, and you're still getting yourself chopped up because it's time. What happens if Bitcoin spends the next month in this area here? Think about how people are talking. The last couple of days, 3 or 4 days ago, it was like all bullish when we had that Tuesday spike. It was all bullish. It was all higher breakout. This is at all-time highs. Fucking load up. This is it. Lock in. 3 months, 6 months to make. You're going to make insane amounts of money. That was the rhetoric at that time. Now, since we kind of slowed down at the highs, I'm seeing a lot more of the posts about, oh, well, be careful with leverage here, guys. Open interest has risen a lot, and the CVDs looks like there's some spot selling, and that's all real. That's all real stuff. But it's a subtle shift of the market opinion to where a lot of people are betting on a big breakout right now, and other people are betting on a deeper retracement. And what if you get neither? What if you get a month where it doesn't go lower and it doesn't go significantly higher, and it's actually building what's a very, very, very bullish consolidation at the top right-hand corner of the range before an eventual breakout? The reason why it would take longer is because right now people might be, oh, careful, watch, there's a bit of a breakout, okay? But when it gets here, they're going to be what? Oh, breakout's coming. And then it drops back, they'll be like, careful, guys. And it comes up, breakout's coming. It comes back, they're like, careful, guys. And the reason why it takes time is because when something's genuinely bullish, like if that path came, this path is genuinely super bullish. So each time it makes that push to 72, 3, 4, 5, whatever, it's more likely to sell off, but not bearishly. Not every sell-off is bearish. Yeah, like before something breaks out, it's going to test that area multiple times and sell off, drop back. And then it's going to reaccumulate. It's going to push up and drop back and push up and drop back. And then it'll go for the actual breakout. And hopefully at that point, people will be in disbelief or not, I guess, not as hyper bullish as they would be through getting chopped up. So that's like the path. Obviously not a perfect, this is not meant to be exact. The path itself is more trying to show the swings of emotion. This could happen in any sort of way. The idea just being that you attempt to break out, but you come back. So you get, oh, we're so back, it's so over. You get a big move up, you're like, holy shit, this is it. Comes all the way back, like, oh no, this is not it. And like this is where your first wave of chasers get just absolutely rinsed. Nobody else does. Nobody who bought anywhere in this lower end has any effect by this. But price going from 60, 72 back down to 66. I mean, that's nearly 8%. That's a move that will flush plenty of people out. And it's chop, 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 chop. That's the key focus here. What else? Did IBIT. Keep an eye on IBIT. Keep an eye on those ETF flows. Because like I said yesterday, if they remain persistent, it's a change and price rises. Seeing the high inflows is the first thing you need to see for a pullback. The second thing to trigger, most important, is price. If price goes higher with those higher inflows, then it's a good sign. It's a sign that the ETFs are not getting immediately dumped on. And then stocks. So pre-election stock pullback. I think from even just a small pullback, I think stocks are holding up. Stocks are, going to hit 6,000. Like the ES going to hit 6,000. I'm sure of it. There's no doubt of it. The question is just when. I mean, probably after the election. And so on yesterday, took out the highs, has dropped back so far. Nothing bearish about this. But if you're just looking at that from a perspective of liquidity as well, there's now a week-long consolidation from Monday all the way through to here that will have stops built at this level, which I've obviously drawn that path and I've set this alert, sweet bottom. Just meaning, do stocks kind of chop around in here and then just drop back into the bands and just take out those lows? Because that doesn't seem like much, but that's like a 1% pullback on stocks. That's going to produce a pullback across risk assets in general. Maybe, given the higher beta, maybe pulls Bitcoin back 2% or 3% due to correlations. And again, it's not a bearish thing. So some more consolidation / pullback would make sense, especially pre-election. There is a consensus view about stocks now, which is something that over in the stock land will create some more chop, as you hear the lovely jackhammers of construction in the background. GM to that. Reason why is because stocks have been up for 2 years. And in the 2 years, from October 2022 until now, most of that time, people were not bullish stocks. If you remember all the way through, I've been talking about how the stocks had just the biggest disbelief rally. From October 22 to October 23, people were not buying it. They're like, no, recession's coming. No, it's bad. It's this, it's that, it's this, it's that. And yet it just kept rising. But now, as we've hit all-time highs and broken all-time highs, it becomes, you're running out of bears in the stock market. Which, of course, once something becomes consensus, it becomes certainly riskier. So, anyway, there hasn't been a significant stock pullback for a while. July, until August. So there was a 3-week pullback, July into August. Since then, we've been up for what, 2.5 months? So, we're getting to a typical period where a rally would have some kind of pullback. That was 73 days in between our levels here. That was 89 days, 88 days, I guess. So we had 2 or 3 week pullback, followed by a 3-month rally. We had a 2 or 3 week pullback, followed by a sort of 2.5 month rally. And some deeper correction will come. Around the election would make sense. So maybe in the next 2 or 3 weeks, we could see that. But that's it. It's a quick overview of how I'm thinking at the moment. Tomorrow on Weekend Workshop, I'm going to be doing what I just did with Bitcoin, but way, way, way deeper. Super deep dive in all things.